Hi, my name is Elnaz Ghanbaryfar, and I'm the Investment Facilitator and Communications Coordinator for Think Renewables Group and its member organizations, including iClimate Tech and Climate Solution Advancement Network, or Climate SAN. In this presentation, I'm going to be providing a brief introduction to climate finance options for companies implementing clean technologies or clean tech companies. For the purpose of this presentation, clean tech includes carbon-related technologies or carbon tech. Since Paul has already spoke about green bonds in his presentation, I will focus on other climate finance options that clean tech companies may want to consider to help them fund the scale-up of their technologies. In this presentation, I have separated public and private sector funding. Shown here are 4 subcategories of public sector funding options. The largest is the first category, which is federal funding programs. Since the federal tax credits for carbon capture, utilization, and storage, or CCUS, are so large, I have created its own category for this presentation. The federal government has created a comprehensive section on their website for the clean tech sector called the Clean Growth Hub. It is designed to be a main source of information, resources, and advice on federal supports for clean technology in Canada. In addition, the federal government created a webpage that lists a wide range of funding programs for businesses in Canada, as well as Environment and Climate Change Canada created their webpage about their funding programs. Finally, the federal government has created special funding programs for Indigenous communities, such as the Clean Fuels Fund, which has a large part of the funding reserved for Indigenous-led initiatives. Shown here is a substantial federal tax credit-based incentive program to encourage companies to invest in carbon capture, utilization, and storage. As you can see, the tax credits are very significant. For example, a 60% tax credit is available for investment in equipment to capture CO2 in direct air capture projects. The third category of public sector funding are wage subsidy programs. There are several funding programs available to aid companies in acquiring staff, including ones to incentivize the hiring of students or recent graduates. With some programs, such as Electricity HR, they do require that there is a learning component in the job so that the career of the new employee can be advanced. The fourth category and last category of public sector funding covers a wide range of funding opportunities. For example, the first 2 are related to funding opportunities for climate adaptation and resilience. The next one relates to Ontario government funding for Ontario-based businesses. We've also listed options that don't necessarily fit into the other 3 categories. For example, the Toronto Atmospheric Fund is a city agency that finances and supports initiatives that reduce greenhouse gas emissions and improve air quality in Toronto and across the Greater Toronto and Hamilton area. Lastly, the Canada Infrastructure Bank is an impact investor that is deploying $35 billion to develop the next generation of infrastructure for Canadians. Moving on, the second main category of funding I'm going to cover is private sector funding. As shown on this slide, I plan to introduce you to 8 subcategories of this type of funding. Our first subcategory for private sector funding are foundations that fund climate action. There are many foundations out there who are looking to fund initiatives, companies, or innovations that match the philosophical value of that foundation, such as the ClimateWorks Foundation. These foundations mainly provide grants, but sometimes lend money or invest in a business in return for equity. The second subcategory for private sector funding are impact funds that want to invest in climate action. These impact funds mainly invest in a company in return for equity, but also lend money to that company. The third subcategory of private sector funding are billionaires that are investing in climate action. Although Paul highlighted some of these billionaires in his presentation, I'm showing his list here as well since I want to emphasize the importance of these funding options and encourage you to consider them. The fourth subcategory of private sector funding are large financial firms that have pledged to invest in climate action. Shown here are some notable groups of these firms, including the Glasgow Financial Alliance for Net Zero, or GFANZ, which includes firms with over $130 trillion in assets under management. Some financial firms involved in these groups may also be members of the other groups listed. Since the firms in these groups are so large and often risk-averse, they often do not invest in small companies. Instead, they often invest through green bonds or purchase stocks in substantial publicly traded companies. The fifth subcategory of private sector funding are angel investors. Angel investors are individuals who invest their own money into companies, and on this slide we have shown some examples of directories and networks of these angel investors across Canada. These investors are often seeking a higher rate of return than impact investors, so you may want to reach out to these investors after you've exhausted all other options. The sixth subcategory of private sector funding is crowdfunding, which in some cases can be a very effective way to raise funds. For example, if you have a new innovative product that you can sell to the public, you may find that you can raise considerable funding through crowdfund from people who want to buy this product. Now, in addition to angel investors, there are family offices and venture capital firms. The lines between the categories is often blurred. For example, some angel investors are members of family offices, as well as some of these investors identify themselves as impact investors. If they do not, then we think it is reasonable to assume that they are likely seeking higher rates of return on their investments than a typical impact investor. There are a wide range of debt financing options. Shown on this slide are three main options to consider. As Paul mentioned in his presentation, green bonds are a substantial source of debt financing. For example, there were over $500 billion of these types of bonds issued in 2021, and Climate Bonds Initiative are helping to grow that number to $5 trillion per year by 2025. In addition, there is substantial debt financing available from commercial banks and leasing companies. Thank you so much for taking the time to view this presentation. If you're interested in more detailed information about these funding opportunities, including links to web pages and organizations mentioned in this presentation, please visit climatesand.org/TMCI. Thank you.